The Fed just held rates steady. No new interest rate hikes or cuts coming out of this meeting today. But one thing that I was very surprised by is that I went to the CME Fed Watch tool and I saw that they are now pricing in Fed increases, Fed funds increases, which I was not expecting. So if you ever want to look this up, just Google CME Fed Watch and you'll be on this page right here. It tells you the current rate right there. 350, 375. And then it shows you the probabilities of where rates will be based on whatever date. So I've got this selected for January of 2027. So basically within the end of the year, there's a non-zero chance of rates going up, which very much surprised me. But you know, just something to keep in the back of your mind as we go through this. We're going to go through our full trading plan today in the OVTLYR trading room. And this is where we help you save time, make money, and start winning with less risk. So go ahead and subscribe if you haven't already. Joe and I are both competing in the U.S. Investing Championship, and we want to share with you the plans that we're doing. But first, let's go through our market update of the day. Like what actually happened today? Well, the SPY is going to end up basically flat. The SPY is going to end basically flat on the day, which is really interesting to see on a big news day of nothing happening, which is a big news day sometimes. We're flat on the day. Let's look at gold, down ever so slightly. Gold seems to be staying within these two order blocks right here. You've got silver, similar situation going on right here, just drifting down. Not a whole lot of interest is happening right now in the gold and silver markets. But oil, holy moly, Joe, oil took off today, took off like gangbusters today. So if you're long any energy stocks or any oil plays right here, today was a really great day for you. It's up over 7% right now. Huge.
What a move.
Now, yeah, what a huge move, right? That's the biggest move we've had in a minute and not in the direction that is good for the economy. Let's refresh this real quick and see where money's going today. All right, so if we were to just look at a high level view of this, where's the money moving out of and moving into? Looks like the semiconductors, right? Intel's up 11% today, Joe. That's a huge move on Intel. AMD's up nearly 5%. Micron's up almost 3%. NVIDIA, which is one I own, is down ever so slightly. Google, which is one that I need to get out of in just a minute, is up ever so slightly. But really, money's flowing over here. Money's flowing in this corner right here. Where's it flowing out of? Looks like it's flowing out of a little bit of industrials over here, a little bit of home improvement over here, medical devices over here, utilities somewhat over here, right? What I'm trying to see here is there any real areas that are really popping off either direction? And I would say industrials are certainly taking it on the nose. And then people are moving their money back into technology. This little corner right here seems to be popping. So there's a lot going on this week still. A ton going on this week. We have so many earnings to get through. Today is, what is today? Wednesday? We had SoFi this morning. We had Robinhood this morning. Joe, you want to go look at SoFi and Robinhood? Joe, you want to know the reason why I don't trade earnings? Let's just take a look at SoFi. This is the future of finance. Oh, everything can be set up. You had your 10 over the 20, price over the 50. It gapped down 9%. SoFi is now down 15% on the day. 15% on the day. What a big, ugly, scary, nasty move. Yeah, it's flowing out of SoFi, that's for sure. Robinhood is also getting murdered. Robinhood also taking a similar haircut, around 14%. And of course, if we check in on the apes, Robinhood's the number one stock, right? I don't know if they're trying to bottom fish or if they're all commiserating for the fact that they all bought Robinhood and all got monkey hammered together. I don't know what's going on, but they're talking about Robinhood over there. They're also talking about Microsoft, and as we could imagine, that may not be the best thing for the Microsoft stock. But they're talking about Intel, and Intel's popping today, and SoFi, as you can see, getting absolutely trounced right there. I don't know. Hey, AWire closed SoFi 2 days ago. This is one of my all-time favorite trades, is running up into earnings, right? Let's go look at SoFi real quick. Running up into earnings like that. Maybe you made a couple bucks, but you get out of the way before it happens. Get out of the way before it happens. And we got a sell signal 2 days ago. I didn't realize that. I thought we were still sitting on a buy signal. All right, so SoFi, Hood got wrecked. I have Alphabet stock, aka Google, that I need to close here in just a couple minutes. But still a lot's happening. You got Apple coming out this week. 42% of the market reports earnings this week. That's a huge amount. I think it's 17% of the entire market cap of the S&P 500 happens within 5 days. So it's a pretty crazy week in the market. Absolutely crazy in the market. So let's do this. Let's jump back into our trading plan for the day. And let's go to this slide here. We need to reduce risk before adding any new trades because the most important part of the plan is planning on the plan, not going to plan. Now, remember, everything that we do is based on back testing. And in fact, this slide deck that you're looking at right here is linked down below and will always be linked for every video in 2026. You'll be able to get the slide deck. I made some changes to the slide deck today, Joe. And Mahesh and I were having some conversations because he's building Plan M into the slide deck. I'm sorry, he's building Plan M in. I totally like messed that up, but didn't I? He's building Plan M into the strategy library of OVTLYR. So you, with one click, will be able to see if it's a buy signal with Plan M, with one click to see if it's a sell signal with Plan M. It's going to be so easy for you. But you'll also notice a couple little things here. I changed the gray color on this best 82 cents a day ever spent. I agree. You'll notice the gray has been changed to green to better reflect the OVTLYR 9 over here, right? Because if it's green, then it's green. That's what we're looking for. The blue is parts of Plan M that are not included in the OVTLYR 9. And then he and I had a discussion, and I went through and I cleaned this up a little bit. So now this is much more I'm hoping it's much more easy to understand because let's go to market breadth. And let's go to summary. One of the upgrades we recently did was put the constituent heat map values here, as well as the fear and greed for that asset. So for example, XLC is communication, XLE is energy. So the constituent heat map is all the average score of everybody in that sector versus what is the fear and greed on that asset itself. So to make things simpler to understand, I went through and I updated this to say constituent heat map under 70 and rising, right? So it's under 70 constituent heat map and rising. So like that one right there, okay? Next, sector constituent heat map greater than the SPY fear and greed. I just tried to make this a little bit easier for you. And I know it doesn't match. It wasn't supposed to, okay? I was just trying to make it green. There's always that one guy. There's always that one. Where's the ban button? Where's the ban button? I'm not going to ban. I'm just joking. But sector constituent heat map greater than SPY fear and greed. So then you got SPY fear and greed, sector constituent heat. Now it's easier. Yeah, now it's easier. You're welcome for fixing all the wording. I was trying to make it easier for you guys. Oh, Jeff, you're too sweet, Jeff. All right, so now I made it a little bit easier to understand with the colors. I made it a little bit easier to understand with the wording. Mahesh really struggled with what is gap and crap. So I spent probably 30 minutes just on this slide trying to really refine how to talk through this. So we're going to actually look at one of the stocks that we had recently, that gap and crapped. Do you remember Lunar?
I do.
Dude. Now, there's a lot going on here, so let me clean this up. Look at this. That, my friends, is a beautiful gap and crap. You want to see OVTLYR? That, my friends, is a beautiful gap and crap. That is the reason we have the gap and crap rule, okay? So let's look at OVTLYR for an example. And we're gonna walk it through this slide so everybody can understand. A gap and crap is a 2 to 5 day pattern. And again, I spent a little bit of time trying to refine this to make it easier for you. The slides are already updated. A gap and crap is a 2 to 5 day pattern with a 5% move up on the gap. So from here to here. Now the gap is defined as the difference between the day one candle. So this is day one. In fact, let me color on this like a 9-year-old. This is going to be day one right here, okay? The difference between day one's close price and day two's open price, which is right here. So this is day two. If the difference between these two is greater than 5%, then that is the gap. So greater than 5%, that's a gap, okay? We're concerned only with gap up and crap backs down. Now, you can draw a line on the low of the day two gap up candle. Draw a line right there. Day two gap up candle. Okay. If price on day 3, 4, or 5 closes below the low of the gap candle day 2, then that is considered the exit point. If price closes below day 2, then close the trade. If it doesn't happen by day 5, continue with the other exit signals. Okay. So a gap and go is a close above the gap that doesn't turn around. And I'll show you gap and go real quick. AT&T is one of my very favorite gap and goes because it's beautiful. It's so gorgeous. Right here. Gap up, slight pullback, go. Right. But it didn't ever close under that candle. So took a little time to work on this, and hopefully by putting the day 1, 2, 3, 4, so you can understand this is a up to 5 day, 2 to 5 day process for gap and go versus gap and crap. Does that make sense? If that made sense, you type the word gap in the chat. Type the word gap in the chat. Cool. Okay, so those are the changes that I did. Like, I didn't change anything in the plan. I just tried to make it a little bit easier to understand. And again, this is linked down below. You can have this forever for free. There's no sign up, no masterclass, no BS. You click it, you got it. So we need to review our active trade exit signals. So our plan M, it starts with a sell signal. Which one of our trades has a sell signal? Let's go take a look. So I have all my trades saved as favorites. See lots of gaps in here. And awesome. I'm glad that it makes sense. You can thank Mahesh because he prompted me to update it. Okay. So none of them that I have on right now is showing a sell signal. So no stress there. In fact, you know what, Joe? I forgot. Chris Chains is going to show us what to look for. I totally forgot about this. Earnings, stops, and exit. Oh, that's how outliers roll. All right. So now we're looking for cross, blocks, earnings, or stops. Okay. These are all chart based. Cross, blocks, earnings, stops. So let's go through them one by one. Google, we have earnings. We have earnings. And the earnings are about to happen in just a moment. So I must close Google. And I'm going to do it right now. So I'm going to come over here with no delay, no question about it. I'm going to close the Google trade. I'm going to hit the Harry Potter button. I'm going to go send to ticket. And I only have 2 in this account. And in fact, let me pull up the family account. Totally forgot that I got to do that in the family account too. Trust me, my family would not be very happy if I forgot to close that through earnings. Hold tight. And so the current price shows roughly $23.55. So I can hit send. And we are filled. The average price was $23.55. Let me do the family account real quick. Taking a sweet time to load. Close position. All right, I'm out. Okay, so now let's go update our spreadsheet. Let's go keep track of what we did. So Google, remember, was a 100% free trade for me, a risk-free trade for me. And I just closed that at $23.55. $23.55. And let's double check. We can see close $23.55. So Google is now closed. Google was a really solid trade. That was a 79.32% gain on Google. Really solid, 79.32% gain with a 9.01% account impact. 9.01%. So very happy with that trade. That's exactly what you're looking for, right? And I was
Wait a minute. You made 79% on a single trade, Chris?
Yes.
Wow.
I'm sorry. I'm so like stuff like that doesn't faze me. It's one of those things. It's one of those things where like it's just part of the game, right? There's small losses, break evens, small wins, and big wins, right? This counts in the big wins category. Big wins category. So Googs, I'm out of that with a 9% account overall change. Now, once we get through all of these trades that are on and we get back to all cash, I definitely want to spend some time going through them, talking about the psychology behind them, talking about how it's important to understand that we're not going to win all of them. We want to maximize our winners and we want to minimize our losses. And of course, that's where the backtesting data comes through. And we can understand that, while we may not perfectly hit everything that we want, we understand that the backtesting data is actually proving out. So let's go to the next stock here. Stops, what was it called? Cross, blocks, earning stop. Okay, NVIDIA. A 10-20 cross, no. Earnings are 21 days out. Okay, don't have to worry about that. Cross, no order blocks on top of it, and no stops are being hit. So NVIDIA's a hold as of right now. In fact, I was thinking about this earlier. I need to make sure I use finance bro terms like buy and hold and sell. NVIDIA's a hold. Let's go to skim. Skim, you got a 10-20 cross that has not happened yet. There is an order block right here, but I'm only concerned about older ones, 120 calendar days old. So this is a baby boy. Once it pops up here, that will absolutely be an exit signal. Cross blocks earnings are 13 days out. Stops are down here. So this is another hold. Let's go to VST. VST has not been the most brilliant trade ever. I'll be 100% honest with that. But that's also why I made sure that when I had the opportunity to roll and take some risk off the table, I did. When I had to take, when I had the opportunity to take any risk off the table, you know that's exactly what I did. So it popped up here. I rolled it for $1.78 of credit. Now it's roughly 10%, so it wasn't all that much, but at least that's not going to be a full loser. No matter what happens, it's not going to be a full loser for me. But Joe, check this out. We still have our 10-20 cross bullishly. It's not beautiful, but it's still cross bullishly. We actually have an outlier block down here that has provided a lot of support. Look at this. How many times does it come? Even this one candle right there wicked down into it. A lot of support through this area. So who knows? Maybe buyers will step in and start buying it. I don't know. I just don't have an exit signal yet. Earnings are 8 days out. My stop is down here. So for me, this is still a hold. Now for you, it may not be. But Joe, because I position sized it in a way where it is what it is, I'm really not stressing on it. It's right there and it's fine and it's going to be a hold. And I understand the risk that I took by originally putting on the trade. Now let's talk about the psychology of that real quick. Now I know some people are like, I don't care about the psychology. Trust me, if you can't understand how to trade this, you're not going to be able to trade this. Plan M, again, this is my plan, not your plan. You do you. Has a 57% win rate, which means it has a 43% loss rate. A 43% loss rate. Yeah, it's an anti-power bar. Yeah. Anti-power bar for sure. But then again, all of this was based on these exit rules. On these exit rules right here. All of this was based on these exit rules. Now, of course, could you absolutely get out earlier? For sure. And maybe you got out a couple days ago. I don't know. But the plan was built on those rules. And so therefore, if I'm going to follow a plan, I need to follow the rules. Okay, so BST stays on. So let's move on to see if there's any new trades that we could put on. So let's look first at the SPY having a bullish trend. Well, as of a little bit ago, unless something changed, the SPY still has a bullish trend in place. Okay, cool. What about the SPY having a outlier buy signal? Let's jump into that. And I mentioned this morning on the live stream, dude, we are past the easy money part of this trading season, right? The easy money part came and went. That's when breadth was running. That's when we're getting more and more uptrends. The easy part's done. The part we're in right now is trying to survive, trying to make sure we keep as much money as we can. Okay. So there's not going to be any trades put on right now because we can see the SPY got over greedy. It's now sitting at 82.46, which is well above the under 70 and rising rule. So because of that, I definitely won't be taking any trades today. Full stocks breadth also has crossed into bearish land. Let's go to, I don't have it pulled up. Let's go to breadth. And we can see right here on breadth that, yeah, we're getting more sell signals than buy signals. We're getting less uptrends and more downtrends. So the easy money part of the season is over. All we can do right now is try to keep as much money as we can by being defensive, by rolling where we can, by keeping our profits where we can, by getting out at the planned exit points, right? Nothing changed from yesterday to today on the exit points. They were always the same from before we entered and will be the same until we exit. So Joe, the only thing I have left to do is I got some cash now. I need to go put it to work. Now, I'm in a small drawdown here, and that's part of the game, right? We don't always get to go vertical. I would love to say that we always get to go vertical, but a small drawdown here, and that's okay. Remember, I'm only caring about my my realized gains or losses. So for me, I'm not even thinking about it. So I have 47.45 in cash. And SGov is sitting at 100.66, which means I need to pick up 47 more shares of SGov. So as easy as this is, just come over here, type SGov, SGOV, and I'm going to buy some right now. And that was how many of those? 47. Equity, 47. Limit price of 100.66. And I hit buy. So buy, it's still open. We may have to pop it up to 100.67 place. Okay, we're filled at 100.67. So my average price of SGov is now up to 100.63. So just like that, I have the trading plan in place. I know exactly what I was going to do. No matter what was going to happen, I knew exactly where I was going to get in and getting out. That was the whole plan the entire time. So I'm going to leave it like that. And Joe, we can bounce. We've done everything we need to do today. We talked about the Fed. We looked at the markets. We took off one trade before earnings, reducing that risk. And we put our money back into an interest-bearing account, waiting for the next opportunity to come. So, Joe, if somebody were looking to save time, make money, start winning with less risk, what do you think they should do?
I think they should go to OVTLYR.com and become a subscriber or try it out with a trial membership. And they should go to Christopher Yule's YouTube channel and subscribe to get us to 50,000 subscribers. We're so close.
We are so close. We're less than 1,000. We're approaching 900 to go. And I want you to be one of those 900. So if you're ready to save time, make money, start winning with less risk, click one of these two videos, and we'll be talking soon.